Hello, this is Victor. I'm here with a new video, and this time we are going to review how Games Workshop is doing this year. So normally they have two reviews in the year. One is around November, but they give the results end of December and Jan. And then there is another review end of the fiscal year that is for the Games Workshop is around June, and they give the update on July. Okay, so here we are going to see how Games Workshop have done the 6 months from June to November on 2021. So you can see this was the report, the 28th of November of 2021, and we have always a comparison between 2020. Okay, 29th of November 2020. First of all, we have to remember Games Workshop did an absolute record on revenue and profit last year. So we are going to compare against a very strong year. And if we look first the top line, we see that the revenue, it's more or less, it's a little bit higher. We are growing a little bit, what normally the companies try to do. I will just look at revenue. Of course, then there is for purposes the revenue at constant currency, but okay, this is not. But the other thing that is important to see is that if you see the revenue is higher, but the operating profit is less. Okay, so meaning that they have more expenses somewhere. Okay, they make more money on royalties, and if you add operating profit plus royalties, you will see that we are about 68.5, and here we have about yeah, 92. You have it here, 92. Okay, so meaning that the operating profit is a little bit lower, so you have more costs than and then also you can see this on cash generated from operations. So there is more cash generated. If we see the basic earnings per share is a little bit lower, okay, there is less points, but in terms of dividend, they have given more dividends than previous year. So overall, is they are going strong. They are going in terms of revenue a little bit better than last year. In terms of profit, they go lower than last year. So meaning that there is more cost, more expenses in somewhere that it's causing this. We can normally always read to the. So we are on the front foot and confident in our ability to continue to deliver our strategy. Our commitment to focus on real cash returns and return on capital continues to deliver honest and consistent returns to our owners. We will continue to try our best in the period reported. We have delivered just that. We have proven once again that Warhammer Hobby creates exciting experiences and allows people around the world to come together and have some fun. We continue to focus on making the best miniatures in the world and to document and deliver an exciting operational plan. I'm once again immensely proud of the global team's performance, the ongoing support of our customers, and those unsung heroes that keep us safe and well. Thank you. So, okay, so since they are more or less happy, okay, again, we have here the values. Also interesting to see how the revenue is divided by channel. Okay, they remember people have three channels. They have the trade, retail, and online. And interesting to see that the revenue online went down. And I will look at the constant currency. I will look here always. It went down, but the retail and trade went up. So meaning that the people is this year is going back. This can be that the people start to go a little bit back to the shops. They're still very strong online. Makes sense that last year online was a little bit stronger as people was forced to stay at home, and some people just were buying online. Although you can also buy online to your trade or to your retailer. No, to trade, to trade, not to retail. Okay, remember, trade are the independent shops, retail are Games Workshop shops, online is online at Games Workshop shop. Okay, so it's the Games Workshop online. Sorry for that, I went down too fast. Again, here we can see the gross profit went down. Okay, then we have the operating expenses went up, and the total operating profit pre-royalties is a little bit lower, so it's much lower, I would say. And the overall, but they have much money on royalties. Royalties normally means other games, that licensed games, video games, I don't know what other things, comics, maybe, I don't know, something like that. It makes more money. Okay. And then, okay, let's go back here. Okay. Then, of course, the disruption, they talk about the disruption of the COVID. We can expect this from a lot of companies, and they talk about the growth. So the team has delivered another record sales performance. So this is what we have seen. They are even better than the last year in sales, in revenue, and this is fantastic. The prior year was far our best performance ever. Our plans was rougher around the edges than I would have liked. This will likely remain the case for a few more months as the global disruptions continue to ease. To be honest, I'm a little bit disappointed that we have not delivered to our full potential. Example, having to delay some of our new products due to the shipping issues. I hope we get the opportunity in second half. So they still have disruption, and they are not selling at the speed they wanted because they still have disruption in the supply. Okay. Even so, I'm delighted to report that we continue to perform well in most countries, the exception being Australia. Okay. So yeah, they talk about the COVID, growth continued, our profit before tax is down 3.4 million. So this is what I say. The profit went down, but the revenue is higher. So meaning that they have more cost. So they have more expenses. This can be expenses on transport. This can be more expensive materials, but also we are going to see that they have invest something and they have more expenses in warehousing and so on, meaning that yeah, they are losing margin. Okay, they are losing gross margin. And normally when this happens, this keeps happening, what this means, there's only two ways to increase margin: or you reduce cost, or you increase price. Okay, so I will, yeah, if they keep losing gross margin, most likely they will also go for a price increase in some things to compensate. Okay. Sales growth was plus 6%, continues across the trade, so it's plus 8 on trade, plus 17 on retail, minus 7 in online. Okay, and the gross margin is what I was saying. The gross margin is down 6% to 70% in the period with increased volumes, offset by the cost of increased staff costs. Okay, so you can see they have increase of the staff cost, investment in pay grades, and increased headcount. It's plus 3 million, plus 68 new jobs in the period. So they are, it means that they are growing a lot of staff. 68 is not bad. Input and carriage cost increase of 5.6 million, an incremental cost of our new facilities of 0.07 million. So here you see why the profit went down in some parts. They also have investment in inventory to ensure we meet customer demand, and has also resulted in additional inventory provisioning of 2.9 million. So it's not bad. Our average RRP increase in the period was probably the same as the last year. Okay, so you can see cost sales ratio at 29%, excluding group profit share. Okay, and then our costs are under control and mainly related to increase in staff. So they keep insisting they have increased staff. Operating profit pre-royalties giving and tough comparative, both down 9.3 million. Here's what I say, that they have lost profit, and this is explained because all these extra costs, they have to increase inventory. More likely, they need more buffer to avoid disruption in the supply, right? We have seen a lot of time that there were some products out of stock. I guess what this workshop is trying to do is to increase the safety stocks so they can minimize these problems. Okay, remember, most companies try to work with minimized stock. It's quite difficult for Games Workshop when they are selling directly, and they have so many different products. Okay, so we have to imagine that Games Workshop have a very complex business in terms of number of items must consume. Normally, don't have that amount of items or these so many items. Okay. So net cash generated from core business operating down to 28.3 million. So this is quite important. Okay, so they have went down in net cash in the period reported against last year, driven by the decline in core business operating profit. They did not decline on sales, they decline on operating profit. And outstanding European VAT receipts following Brexit. You can see here the impact of Brexit have been 15 million. Okay, is not down. So operating profit. So this operating profit can be transport, can be all these things, that all these disruptive things, they have went up by 15 million, and again they have been hammered by 15 million as well by the Brexit, by the new tax to move goods from UK to Europe. So you can see what is the problem when Brexit for some companies. Our constant focus on managing our balance sheet has ensured our net cash generation remains in great shape compared to historical levels. So anyway, yeah, they can say that compared to other years, they are still doing a good amount of cash. Major capital projects. So they have 2.6 million in capital projects in the first half, including warehouse and factory investment. Okay, so there will be more explanation about that. Returns to the shareholders and foreign differences, the impact. So they have also the exchange differences by the currency. Okay, so they, of course, if you have to then move back to pound, the fluctuations of the pound versus the dollar and the fluctuations of the pound versus the euro can make impact as well on your benefits. Maintain an appropriate balance sheet to ensure we can maintain our current level of profits, can withstand any short setbacks, and provide for safe ongoing operational business in an ethical way, and reinvest and pay regular. So this is nothing else, nothing strange. Quick priorities. So they say that they keep focus on the customer. I will not expect less from a company that try to sell. This all cost. This should be the focus of any company, right? The customer focus. So Age of Sigmar launch in July. So was our best fantasy launch to date by considerable margin. So meaning that Dominion have been better than War Souls and have been better than Age of Sigmar, but also have been better than any Warhammer fantasy. So Dominion have done much better than any other fantasy launch. Okay, so this is important to know. So Dominion is doing well. They seem to be very happy with that. Following last year the launch, we have been revisiting so much love factions of our Warhammer 40,000 universe with Adeptas Sodoritas, Space Marines, Orcs, and Astra Militarum, all receiving new models in the period. Yeah, I'm surprised that they are on. Yeah, we know that there was a little bit on Astra Militarum. Yeah, we had the Kill Team things. The new version of Kill Team, our fast-paced skirmish game set in 40k universe, was well received by hobbies, so it means that they are also quite happy with the sales. Its long-term place in our offer. We celebrate this with a high-end animated battle sequence, which quickly became our most immediately watched. So yeah, they say that it was a very success. So they're very happy that the people goes to watch the these animated things they do, these animated films they do to launch the games. They say that's good. They also talk about the Imperium that will come. We have been producing our core products so they also have introduced Mandarin as one of the languages that they produce for China. Although suffering some disruptions in global shipping, there was a steady flow of new miniatures. Yeah, they told that. Okay, our epic Horus Heresy novels is drawing close to its galaxy changing and conclusion. Okay, so they say that they go to the end of the series, and then they talk about the IP, design studio, payrolls, cost. So they have increased the cost of the IP studio from 0.8 million to 5.6 million. So this is really a quite important increase. They talk about the community. They say that the traffic, or the number of people against the community is still growing. Okay, so supporting these video miniatures, we have continued to put out tens of thousands of pieces of content across the Warhammer community. .com and social channels. As a result, we are with more Warhammer fans than ever before on social, despite ever more restrictive algorithms from big players. I don't know what they mean, so this seems that there have been some disruption. We are reaching more people compared to the same period last year. So they mean that they have growth the number of people going to the site. On Warhammer community.com, users are up 15% across all territories. So they have growth. The number of visitors by 15% is not bad. Within the period, we launch a range of new miniatures to ensure customer experience and hobby, with something for every Warhammer fan, our brand subscription, and they also talk about Warhammer Plus. And they say that the Warhammer Plus is doing very well. I'm sorry for that. Warhammer Plus is doing very well. So, they say that they have a great start. So I don't know if this is propaganda here, but they look quite happy in this letter. They say that we view Warhammer Plus as a club, and they are quite happy how this is progressing, and they will keep working for that. Okay, so yeah, they will continue with the key priorities, and then also they continue with the COVID. I think this was the most important things here that I want to share. Yeah, here is another point that I was looking, is the total warehousing costs have increased by 2.8 millions, but you can see 2.8 millions is a lot, because the cost used to be, so now it's 9.7, right? Remember, this means that they were around 7, so now they are more on 10, okay, millions. So it's of pounds. That is quite a lot, okay, of increase. And then they also talk about the Brexit disruption, capital investment. Here they talk about what they have invested. They have invested 1.8 million in facilities and equipment, and 3.3 million in tooling. Okay, so this is the cost. So you can imagine this is how much they invest on tooling. These are the molds. Okay, and in merchandise and logistics, they have spent 1.5 million. So you can see that there is some operative cost, and somewhere they were saying they have put some new machines. So this is also put some new injection machines. And then they talk about the video games, the licensing. They say that they are quite happy on the licensing. So this will be that. So we have again found great success licensing Warhammer into computer games in some world-class partners. So number of major video games due to the launch. So they talk about Warhammer Total War, Warhammer 3, Warhammer 40,000, and Dark Tide, and Lost Crusade. And then they talk about the Space Marine 2 as well. Okay, and entertainment, they also say that in terms of media, entertainment progress continues, and we are delighted to have signed a major LA-based agency to help us. So they are working on the Eisenhorn in Los Angeles. Okay, and licensing income. So they told royalties received in the period increased by 11.4 million to 20.1. So this is what they say. So all this, what they are investing, is what they are receiving in return. Okay, sales again. They is more of the same. You can look more in detail. So what I would like to go now is at the end we have this is a repetition of what I said before. Here you can see where they have the money on, so what are the assets they have. So all this is, I will not go into these details right now. I don't want to make the video eternal. I just want to go to the split by regions, and we can see how each region is doing. Again, here we see again the split between trade retail and online. And here we see the trade retail and online by region. So we have UK and North America together. So you can see again, UK and North America are the biggest contributors, the biggest players at this end of the fiscal year. Okay, so we have to compare these two. So UK have decreased and Europe have decreased a little bit in trade. North America have compensated by the loss, but we also can see they have increased a lot on the rest of the world. Black Library seems that went down a little bit, and Asia is growing. Okay, have grown quite a lot. Growing from 4.3 to 5.1 is quite an important percentage growth. Okay, so it's quite an important growth. Again, retail growing in UK, grow flat in Europe. It seems that Europe is maybe the region that is growing the less, and this can be because of the Brexit impact. I don't know. Europe, it seems that is the one that is more, because this is revenue. So here we don't have the cost of the. This is just information of external revenue. No, yeah, this is not. They are the less sales. So the only part where we see that there is decreasing is Europe, right? So Europe, they went from 9.8 to 9.5 in retail. So and then as well in online they went down. They went down a lot in UK. I guess the what you can see here. This is very interesting. So they went down here 2.5 points, and here they went up 3 points. And it seems that I guess some of these people are back to the UK retail shops. Okay, I think this is one how we have to read this part. Again, it seems that, and I think here maybe the decrease is a pity that we don't have UK separate from continental Europe, but I'm pretty sure what is making the figures lower is the continental Europe. You can see anyway, North America here is half almost. I will say it's a little bit. It's 45%. Here, North America is about 30%. Yeah, 16. Yeah, more, a little bit more, maybe 40%. And here, North America, it's about, again, this here about, it's about 1/3. It's about 40% as well. So North America is quite a big volume of sales. Again, here we have our operating expenses. Okay, by segment, and then we have the segment operating profit. Okay, this is all. So what I want to see is that all the regions are growing. I think here I will stop here my conversation. So we can see all the regions are growing. North America have grown a lot on retail, and North America except here, but I think it's the same. Okay, they decreased 2 points here more or less, and they have increased 4 points here. So in total are increasing, right? Again, Australia and New Zealand is the one that is decreasing here. Australia and New Zealand is almost flat here, and Australia and New Zealand is also decreasing. So it's the one that is decreasing in retail and online. So this is the reason that they say that it's not doing that well. On the other side, Asia, it's a little bit flat. Asia have grown in online is also flat. Asia have grown a lot on trade. So it seems that the way to introduce into new regions will be more trade and retail, and maybe than online. So this is all what I want to share. So overall, if I have to summarize and give a fast summary, so revenue went up, operating profit went down, and licensing went up. Okay, what that means, if they need to recover part of the gross margin, the only way to do it is to reduce operating costs. I don't think they will be able to do. The business is very disruptive these days. You need more operating costs to deliver the same. The transport is more expensive. The energy is more expensive. And there is also the Brexit that is impacting them. So the only way to mitigate that is to increase costs. So I will not be surprised if by end of the fiscal year, Games Workshop is touching again the prices. I will not be surprised. So that's all for now. So I hope you have enjoyed this video. Please let me know what do you think. Let me know what do you think about my opinion, and what do you think about how Games Workshop is performing. That's all for now. As usual, thanks a lot for watching, and see you again later. Bye.